Hello everyone, my name is John Cunnison. I'm the Chief Investment Officer at Baker Boyer Bank. Welcome to the monthly market update. Today we're going to talk a little bit about the wonderful stock returns that we've enjoyed year to date in 2024 and some in 2023. We'll talk about valuations, meaning are stocks cheap or expensive today? We'll talk a little bit about some emerging risks, one potentially being inflation and the other being interest rates. Now, before I go on about the wonderful returns that we've experienced, I kind of want to knock on wood because we're not above superstition here at Baker Boyer, but we've had really, really strong returns in 2024. So U.S. stocks year to date, and we still have one more month in the year, and I don't want to jinx us, so I actually will knock on wood. Year to date, we're up about almost 30% with U.S. stocks. International stocks are up around 9% year to date. Bonds, 3 to 4%, real estate, 12%. So extremely strong returns. Now, it's important to remember that these wonderful returns, right, we need these years because they're not all going to be wonderful, right? And to achieve that mid to high single-digit return in a given year on a balanced portfolio, that's generally speaking what we want to achieve to make our financial plans work, right? Depending on the level of risk. So these are years that we need, and we'll take them. And we need to be positioned for these wonderful returns when they come, right? So we don't time the markets. We're not in and out. But a balanced portfolio did very, very well this year. Now, it's also important to remember that the most thoughtful investors really think about two questions when they're making investment decisions. The first one is, what's happening in the real economy, right? What's happening with companies that we're invested in who are buying and selling goods, right? Who are manufacturing goods, who are hiring people? What's happening in the real economy? That's one question, right? The other question is, how is the market pricing all of that? So we can have really good news, right, in an economy with companies that are doing very, very well with high profit margins. Really good news. Does that make it a great investment opportunity? Well, not necessarily. Not if all of that good news is already in the market price. Now, right now, people are relatively optimistic. Part of the reason they're optimistic is there's good news in the economy. We've avoided a recession, at least thus far. Unemployment is fairly low. If you want a job, you can get a job. We've got growth that's reasonably strong. We have inflation that's coming back down to target, so much so that the Federal Reserve has actually they've started reducing interest rates. All of those things have given a lot of enthusiasm to markets. Now, layer on top of that the latest outcome of the presidential election, where we have a Trump administration incoming, and there is a perception in markets that Trump administration is going to have more pro-growth policies. And when I say that, I mean reductions in tax rates and very likely reductions in regulations, right? All of those things could bode well for profits of the companies that we're invested in and overall growth. Now, let's turn to the question I mentioned earlier about valuations, right? Currently, our U.S. stocks, are they cheap or expensive? And another way to ask this question is, all of that good news that I just mentioned, is that priced into markets already, or is it has yet to be priced in? Is there still an opportunity in U.S. stocks? Now, I'm going to put a chart up right now. In this chart, this shows what's called the price to earnings ratio of the S&P 500. So for the 500 largest U.S. companies, this chart shows over time, going all the way back to 1994, it shows how much what do you pay for $1 of a company's earnings? And of course, that's what we do when we invest in stocks, right? We're buying a share of corporate profits. Well, what did those profits cost us? Well, if we go back to the beginning of this chart, right, we see that gray line go up really high, right? That's when stocks were expensive. That was the tech bubble, right? When people were paying a lot of money for some companies that didn't have any earnings, right? So stocks looked relatively expensive. Fast forward to 2008, right? And that's in the middle of this chart. And we see that stocks were a lot less expensive, a lot of fear in markets. And then we've seen this climb since 2008 up to where we are now, a couple of bumps around COVID. But where we are now with stock prices, things look reasonably rich or expensive, right? Now, the good news is that a lot of us who have owned stocks have ridden those prices up to where we are currently. But the question we have to ask ourselves now is, what do things look like going forward? Can we continue to enjoy these extremely strong returns, right? When the answer is, well, not without seeing the earnings growth of these companies increase a lot, right? So right now, U.S. stocks do look, somewhat rich. Now, it doesn't mean that we need to head for the hills, but it does mean that there are a few things we should be thinking about. Where are there less expensive areas of the market? It could be just less expensive areas of the U.S. stock market. Could mean international stocks that on a relative basis are a little less expensive than U.S. stocks. Could mean just rebalancing your portfolio into bonds, locking in some of those gains. All things that the portfolio management team at Baker Boyer is doing. Now, the other thing that we have to consider as we look forward to 2025 is what are some of the unintended consequences of pro-growth policies, right? Now, one of them may be inflation. So this is an emerging risk that I think we do need to consider for several reasons. And let me just paint a picture for where inflation may arise. One of the proposals of the incoming Trump administration is to increase tariffs on a basket of other countries. So I think one of the proposals that I heard was a 10% tariff on all imported goods, 60% on Chinese goods, and a tariff by definition is inflationary, of course, because it increases the price of an imported good. One of the side effects could be that instead of buying a Chinese good or some imported good, we buy a U.S. good. We buy one that was manufactured by a U.S. company, right? Well, at a time when unemployment is at 4%, right, that will require meeting extra demand, extra consumption with what is already a fairly tight labor force. The ability for U.S. companies to hire an additional worker easily is somewhat constrained when unemployment is low. Now, what that would likely do is it can put upward pressure on wages, right? And that can sound like a good thing, and it is, but it can also mean that companies in the U.S. have to increase prices. Well, what is that? Well, that, of course, is inflation. And many of the things I've just mentioned could be somewhat exacerbated if some of the deportation proposals of undocumented immigrants, if those proposals come to pass. And just to put a little context on that, one of the proposals was to deport 1 million undocumented immigrants per year. Now, that's about 0.5% of the labor force. So if unemployment's currently at 4%, right, that could potentially drop as far as 3.5%. So even tighter, right? More upward pressure on wages and potentially more inflation. Now, what does this all mean for stocks? Well, what it could mean is that if we do begin to see inflation get a little stickier or begin to increase, that means that all the good news that we got from the Federal Reserve and decreasing interest rates could go in reverse. Right? We could see the Federal Reserve begin to increase interest rates. None of this is a foregone conclusion, but they are things that we need to consider, and they're particularly important during a time when there's a lot of enthusiasm in markets. Prices are relatively high. There's a lot of euphoria. During those times, we need to consider, what could go wrong, right? And that's what we do with the portfolio management team of Baker Boyer, thinking through probabilistically what are some outcomes, how do we prepare for them. And that's just one example of some of the things that we're thinking about, we're building into portfolios. If you have any questions about this or anything else, please reach out to a member of your team. We'll be talking about it with all of you in upcoming meetings. With that, good investing, and thank you for joining me today.